Okay, hey everyone, this is Scott here again with my next live trading video. Today is Thursday, May 12th, and in this one here, we'll be doing a few things. Number one, we'll first take a look at the broader markets, basically the S&Ps, the NASDAQ, the Russell 2000, etc., and I'll be discussing my very short-term outlook on this market. And then secondly, we'll take a look at two new trades I placed this morning, one in Boeing, the second in Apple. Both these trades were bullish trades to reflect my short-term assumptions on this market, as I'll discuss here in a moment. And then finally, we'll take a look at a trade I took off this morning for a profit as well. Where for this trade, I was super dead wrong on the direction of the stock. It was also in Boeing. And basically, it was a short put option trade meant to play for a bounce in the stock price, but Boeing plummeted a whole heck of a lot more below my strike. But because I was able to use the underlying stock to defend that trade, again, that's why I was able to walk away from it with an overall profit. So again, I'll be discussing and showing you guys in detail how I was able to pull that off. But as always, before we dive in here, in case you are brand new to the channel, again, my name is Scott, and I just want to let you know that you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1 month free trial. All right, so first off here in this video, let's take a look at the broader markets and I'll discuss my short-term outlook on equities. So initially, we'll take a look at QQQ. This is basically an ETF which tracks the NASDAQ, and we'll go ahead and zoom in a bit here on this chart. And so as you're going to see here, the story amongst all the major indexes is basically the same here, right? Where equities have been pretty much selling off in a huge way almost every single day in a row for the better part of a week and a half now. And actually, as I mentioned in yesterday's video with this candle here, this was Wednesday, May 11th, and on this day, the CPI number for April was released, basically the inflation number, which came out still red hot, and for some reason, equities rallied off that apparently good news for some reason. But also, as I mentioned, this definitely does not make sense because with inflation being so out of control recently, and with interest rates rising, war still going on in Ukraine, with the economy actually contracting last quarter, all these kinds of red flags, my expectation was at least to see equities eventually be basically hit in the face with reality and return back to lower lows. So with yesterday's rally being totally reversed and with today's opening so far being even lower, I'm definitely pleased to see that. At least the market is behaving rationally. But that being said, with equities having come down so much, so quickly, almost every day in a row, at some point you will see a short-term bounce or a bear market rally, regardless of the red flags we're seeing right now across the US and across the world. Right, basically, even though I personally am very bearish on this market in general, I do think over the next few months or even the next few years, we could see equities continuing to move lower. I don't think it's all going to happen in one straight line. Right, clearly, as we've seen in the past here, we can witness some very vicious bear market rallies to the upside, even in the face of all this terrible news. And really, even since the peak of this massive bear market rally right here, which happened back in late March and early April, we really have not seen a major bounce since that point. It's pretty much just been straight down ever since. And today, perhaps, it looks like we might finally be finding a little bit of support. For the Qs here, it looks like right around $285 per share. We'll see if that support level does hold. But basically at this point, I'm willing to step in and start placing some short-term bullish trades to play for a short-term bounce. Moreover, let's also briefly take a look at SPY now. This is an ETF which tracks the S&P 500. And again, very similar story. Let's go ahead and zoom in here on the chart. And as you can see, equities in the S&P is moving down almost every single day in a row for about a week and a half or so. And once again, perhaps finding some support here at around $386 per share. And then finally, one other major index I look at is IWM. This is the Russell 2000, mostly small cap companies. And this index here has definitely been hit very, very hard in the past few days, as you can see here. But once again, looks like we are finding some support, perhaps around 170-ish bucks per share. And also take note, this support level right there in white goes all the way back. And in fact, let me change the time frame on this chart to a 3-year, 1-day chart. And there we go. Let's go ahead and zoom into this zone right there. So this support level goes all the way back to the peak right before the massive COVID crash that we saw in early 2020. So I definitely would not be surprised if the Russell 2000 here found some significant short-term support around these price points, and that perhaps might stabilize the entire market for the time being. The S&Ps, the NASDAQ as well, all might find a consistent level of support, and we might see that bounce that I've been looking for. Or of course, on the other hand, I could be totally dead wrong and we could see equities plummet even further, in which case that's why my strategy here involves using the stock to defend my short put option trades in these kinds of situations to still give me the potential to make a profit. And again, I'll show you an example of that towards the end of this video. So next up here in this video, let's take a look at the 2 new trades I placed this morning. So briefly, we'll come back to the monitor tab now and take a look at the trades I've made so far today. And as you can see right there, the first opening trade I made today was an Apple, where I sold a short put option with a 135 strike, and also in the June 10th weekly expiration cycle. So now we'll briefly come over to the charts and go to AAPL. There we go. And then also we'll change the time frame on this chart back to a 1-year, 1-day chart. And then we'll go ahead and zoom in a little bit there. So as you can see here, I do personally think there is a nice support level for Apple right around 140-ish bucks per share, which extends all the way back to this zone, which looks like happened right around September or October of 2021. Apple was able to form a nice base here, hit support right around that price, and then zip off to the upside. And also, of course, make all-time highs. So now, once again, fast forwarding to today, we saw Apple come all the way back down to that price point once again. And so far, we are seeing a very nice bounce off that level. So essentially, once I saw Apple getting very close to about 140 bucks per share, that's when I stepped in and sold that put option, which again, coming back to the trade tab now, for that position, I'm in the June 10th weekly expiration cycle with 29 days left to go. And again, sold that 135 strike put option here. And did so for a starting credit of about 445 bucks, I believe, which is pretty nice given that Apple is usually a low volatility stock, and therefore the premiums on these options are usually not that high. But of course, with the massive sell-off that's been occurring, not just in the past couple weeks here, but over the past few months, implied volatility across the entire market right now is still very high. So actually, let's come back to the charts one last time, and then come down here and take a look at the implied volatility chart for Apple. As you can see right now, the current level of IV for the stock is about 47%, which is very high for Apple. Right, so basically this translates to an IV rank of 80%. That's very high. And also an IV percentile of 99%. That's very, very good. And also just visually speaking, taking a look at this chart, as you can see right now, the IV is definitely higher than pretty much any other point it has been in the past 1 year. So ultimately, this means right now the prices for Apple options are among the highest, the most expensive they've ever been in the past 12 months. And so that's why in particular, along with this technical analysis, why I stepped in and sold that put option this morning. And then secondly here, let's come back to the monitor tab again and take a look at my second trade I made this morning. This was in Boeing, BA. Same expiration cycle, June 10th weeklies, and sold the 115 strike put option for a credit of $455. So once more, we'll come back to the charts and now take a look at Boeing. And for this one, we'll change the time frame back to a 3-year, 1-day chart or 3-year daily chart. And we'll zoom into this area right here. So back during 2020, this was the massive crash Boeing experienced during COVID. And then after the absolute bottom here at around 89 bucks per share, that's pretty crazy, Boeing was able to find some short-term support right around there, call it 120-ish bucks per share. And then ever since that point, Boeing has remained above that level until today, of course. So now we'll zoom into today's price action. And so in a similar fashion with what you saw on the Apple chart there, Boeing came down and just touched that major support level. And so far, it has backed off that price significantly. So for the time being, I'm taking that as affirmation that that support level is going to hold for the time being. And that's why, along with the high implied volatility, right, for example, taking a look at the IV for Boeing, it's at 65% right now, which is the highest actually it's ever been in the past 12 months. So therefore, we're seeing an IV rank of 100%, IV percentile of 100%, very high implied volatility for Boeing, and therefore very expensive option prices. So again, this high implied volatility combined with this so far holding of this major support level is why I stepped in and sold the 115 strike put option. And specifically, I sold that 115 strike to be below that support level there, just to give myself added cushion in case I'm wrong or in case I don't have the levels quite exactly lined up to where they might actually be in reality. And same thing with Apple. I typically sell my put options much further away from those key price points just to give myself that added bit of cushion. And then finally in this video, let's now come back to the monitor tab and take a look at the trade I took off this morning for a profit, also in Boeing here. So again, this trade was a trade I made a while ago. It was a short put option position where I was also super dead wrong on the direction of the stock. Boeing just continued to fall lower and lower and lower. But because I used the stock to defend this trade, that's how I was still able to walk away with a nice profit. So as you can see here with this order, initially I sold the 140 strike put option in the June 3rd expiration cycle. So to give you a visual sense of where that is, let's come back to the charts and take a look at the Boeing charts once again. 140 is right there. And I believe I placed this trade when Boeing was around this price, maybe around 150 bucks per share. So clearly, as you can see, I was completely dead wrong on the trade, and Boeing just plummeted almost every single day in a row thereafter. And today it reached a low of about 122 bucks per share, which of course is well beneath my 140 put strike there. And so ultimately what I will do to defend these trades if I am super wrong on the direction is, in this case, once Boeing fell below my put strike, at that point I shorted 100 shares of the stock. Or basically I have orders already set in place that will do this kind of thing for me automatically. So now coming back to the monitor tab, and we'll briefly go ahead and pull up the calculator here. And I'll move this right there. So initially I sold this 140 strike put option a few days ago for a credit of $490. And this morning, as you can see here, I bought back the contract to close for a debit of $1,545, quite a bit more. So now we subtract 1,545, and that means just on the option portion of the position, I lost $1,055. And so now at this point, I'm going to go ahead and clear the screen on the calculator, but don't forget this number, 1055. And so like I mentioned, once Boeing fell below my 140 put strike here, I had some automatic orders that would short sell 100 shares of the stock. And the price I got filled for that order was $138.76 per share. And I believe I had my orders configured to short sell the stock once it reached a price of $138.75, a bit below my 140 put strike. So getting filled at $138.76 is actually very good. This is a very great fill price. And so then also this morning, I bought back to close those same 100 shares of Boeing and did so for a price of $125.70. So now we subtract 125.7, and that means I made a profit on the short stock of $13.06 per share times 100 shares. That's an overall profit of $1,306. And so then finally, the last step is to subtract that $10.55 I lost on just the put option contract. And therefore, in the end, that still means I made a profit of $251, which is great because this is actually a little bit more than I was initially targeting to make when I first put on the trade. Right, basically for these kinds of trades, I typically want to take my profits at 50% of the maximum. So again, if I sold that put option for a starting credit of $490, then I would want to buy the contract back once it reached half price, or about $245. And that, of course, would also be my final profit, $245. But because I was dead wrong on this trade and I had to use the stock to defend it and whatnot, and still being able to walk away with an even greater profit than I was initially targeting, $251, that's certainly some very good news. Right, basically not all defended trades like this turn out to be full profits like you're seeing here. Sometimes they're much smaller profits, or sometimes I still cannot even manage to make a profit at all. Losses are always part of the game, of course, but at least with this kind of approach, you can mitigate your losses to a significant degree. Right, also one side note here, if I come back to the charts one last time and we go to Coinbase now, a little while ago, if I zoom in on this chart, a little while ago, I had a short put option on this stock as well, somewhere around a 140 strike. And this stock has plummeted all the way down to a low so far of around $40 per share. So basically, Coinbase fell by about $100 below my put strike, which if today was the expiration date, that would have been a loss of $10,000 just on one contract. But once again, because I shorted the stock once it fell below my put strike, I was able to turn this trade into a small profit. So bottom line here is, however you decide to defend your trades, make sure you do stick to your defense plan and you keep your losses in check, especially in this kind of bear market environment where stocks across the board, even some of the bluest of blue chips like Disney or Apple, are getting slaughtered. This is definitely not the market we've been seeing for the past 13 or 14 years since basically the bottom of the housing crisis back in 2008 and 2009. So a lot of people, myself included, are not used to trading in this kind of market environment. So again, just keep your risk very small and always in check. Make sure you know exactly how to defend your trades and just be very careful and cautious. And so with that being said, that's going to do it for this video. I hope you enjoyed it. And please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.